The S&P 500 sold off again. In today's video, we're going to discuss a stock that is about to go crazy tomorrow and why y'all should keep it in your watch list. We're also going to be looking at some of the stocks that I've mentioned in the past videos. Now, let's dive into the charts right off the bat. The S&P 500 is rolling over from the green circle, as I told y'all. All right, this is the futures. We're gonna go straight onto. Well, actually, let's just keep it here. For this thing, I expect the futures to drop down to 7,600 by this Friday. This makes sense to me. This setup right here, this 4-hour chart, it broke out, did its thing, and then formed something fake just to entice a lot of greedy bulls. The greedy bulls got up here. Now we're falling over. Just like I told y'all last Thursday, it's following perfectly. All right. And the gaps at the bottom, again, we're moving exactly along the line. This is great. This is really, really, really good. And y'all should have gotten paid. Y'all should have been getting paid since Monday. All right. I wouldn't change my opinion until we get down to like 700 and at least 755. All right. I will be really happy if it goes even lower. I would be. So this is how the daily is looking. The bears have officially taken over the SPY QQQ also, I think. Let me see. Yeah, the bears have taken over QQQ. This gap right here is a little worrisome because tomorrow we could open at the same price that we are right now and then have a big squeeze in the morning just to take care of the gap before we close the day as a gravestone doji, which would set up for both Thursday and Friday, right? That's something to keep in mind. As traders, you gotta keep these scenarios in mind. The gap at the before that it left behind is again, it's a cause for concern, but we know where the trend is going, and we know where the gaps are below. Um, you just gotta be very, very cautious, very careful, very precise with it. That's all. Now, the stock that is about to go crazy tomorrow, that stock is none other than Hood, Robinhood. All right. Now, I want to share Robinhood with you for a few reasons, actually. First and foremost, big push, big drop, and then we had another smaller push all the way up to 121. And right now, what this is looking like is just a rejection of the previous resistance. All right, we're fading lower and we're projecting again. The stock itself formed a trap. And for those of you who didn't notice where that trap was, let me show you, right? So after a big drop like this, people will think that this is the bottom and that we're about to have a big recovery. And it traps a whole lot of accumulators in this range, right? Between $90 and $95. It accumulates them. And then we have a little bit of a pump fake all the way up to resistance. That is a solid points of resistance right there. A brick wall. And it didn't want to go higher than that. Even on the weekly, you see what I mean, right? Even on the weekly, we hit that resistance and now we're rolling over. And let's go back to the daily. No. We're going to go on to the 1 hour. The 1 hour, that way y'all can really see the trap. Which kind of is it's exactly the same as the SPY trap. It looks so good, but if you're not experienced enough, you most likely got trapped in this one, right? It had an amazing ascending triangle right here that broke out in the morning on Thursday and then gave out on Friday. That's the first indication that this entire thing is just a big trap, right? And then Monday, it did a whole lot of nothing. It didn't even close back above 97. And the SPY formed bearish structures along with a whole lot of tech stocks that form bearish structures, which validates the big dump to be downside, right? You were not supposed to, like if you got in here at 96, hoping for a move up to like 103 or 105, and then you see this, that was your second chance to get out. And your third chance to get out was on Monday, right? So with this stock and with this trap, again, all of the bears, all of the bulls who got trapped are located right here. They're all selling at the moment. With this, along with the 5 minute, if you look at the 5 minute and if you look at what happened today after the big gap down, there is a descending triangle on the chart on a very weak stock, right? With the breakdown being right here. This time, this stock actually has a breakdown intraday. It's not like Google that I took, which didn't have a breakdown, but I felt confident about it, right? Which is why I bought puts on it. This one had a breakdown, and it broke down right at 92. Where is this thing going to go? If everything works out well and it does what I think it should do, what I've seen it do in the past, we should see this stock drop all the way down to at least 87. Delusional targets. Let's talk about those. Like, let's say it gets to 87, but I'm feeling a little greedy. How low can this thing really go? I think previous level of support aren't too far-fetched. Like 84 isn't too crazy. By tomorrow or by Thursday, I think 84 is doable. More delusional than that would be the next level of support, which is right at 80. Yeah, it's possible if I just change the whole perspective and I clean up the chart and I try to see if there is a bear flag on there when I look at the 4-hour. Or a rising wedge, actually. Yeah, it's more like a rising wedge where we have that. We have the original trend, and then we have the consolidation followed by the continuation of the trend. This makes a lot of sense for the drop down to 80, maybe even lower than 80. Yeah. I don't have a counter argument to tell y'all about this. I don't have a reason to be bullish on the stock at all. Now that I've shown you guys both perspective about the first perspective on the trap bulls and the bearish perspective with this structure that's not my favorite. I don't like bear flags. I don't like ascending wedges. But sometimes they do happen, and if there is something extra on top of that, like what I just showed y'all with the 5-minute, then I'm more inclined to take it. I like having multiple reasons, like 4, 5, 6 reasons to actually take a trade on any given thing before I go in or before I make a video about it, right? So with this one, with Robinhood, watch it for a drop down to 87. Okay. Now, the next stock that y'all should be keeping in your watch list, this one was yesterday's stock, Google. And we got to look at the 5-minute. And with Google, let me share with y'all what actually happened. Yesterday, I told y'all to watch it for a drop. All right. And it was one of the two stocks that I was watching at like 257 right here. Y'all see that, right? First, Google. Or if I go into watch this, yeah, we got Google right here at 2:48 p.m. This is 12 minutes before the market closed, right? And then the next one was AMD, right? I knew both of them was going to drop. I was just trying to figure out which one was going to pay the most. They both paid. Unfortunately, I chose wrong. AMD ended up paying the most, and I think AMD is gonna pay more. I'm gonna talk about it real soon. But back to Google. That was the only trade that I took this week. This is from the 14th, and this is from yesterday until today. I had to get rid of all of my puts in the first minute because I didn't like the way it opened. I was hoping it would open at like 340, but since it opened at 342, I was more willing to get out as quickly as possible if it showed any type of dump. Right, and luckily for me, out the gates, it opened and immediately flushed, and I took advantage of that dip all the way down below 341 just to get out of all of my contracts. before this thing eventually bounced, right? And now I am in hood looking for the drop, which is why I'm making a video about this thing, right? Now we'll see what happens with Google. Is it going to drop still? Yes, I have an alert right at 340. I'm waiting for it. Because I don't think it looks sloppy here, which is the reason why I wanted to get out so quickly. But when a volume increases back up again, I will be looking to get back in it. Why? Because there is because the stock itself is weak, because the indices is weak, because there are gaps below to fill. The first one being at 330 and the next one being at 320. And yeah, these are the reasons why I like it. So just keep your alerts where I have mine. I'm waiting for the first day where it rings. That way I can actually short this thing down. Because it's playing games at the moment. Yes, it's paying off. If you're not fast enough, you're not gonna make any money on this one. Like if I waited all the way until like here, if I waited until here to get out, I would have made maybe 10 or 15% instead of 60 or 70% from that bottom wick right there. All right. So if you're not quick with it, you're gonna miss out. But eventually the volume is going to increase, the stock is gonna stabilize, and then it's gonna have the actual collapse that I think it should. So keep your eyes on Google. The next one that we gotta look at is Tesla. And Tesla is looking kind of weak. I wanted to talk about this one yesterday, but the video was getting a little too long. Tesla is getting kind of weak. Like it got up here on Friday. It went all the way up to 350. It got into the gap, but it really couldn't push higher than that. And then it went back underneath. This is not a great sign because there's a lot of short sellers in here. And right now they're winning. And as long as this thing continues to roll over, and as long as the indices continue to roll over, this one will most likely get back down to 320 by the end of the week. Maybe even lower. So that's my 2 cents on it. The weekly chart is bearish. And the negative reaction from earnings isn't a good sign either. I told you before, whenever a company, any company, dumps by... This one is $1 trillion company and it dumped by 10% or 12% after earnings. The next quarter usually isn't too great. Like it tends to play games. It tends to just be a slow, gradual fall for like 2 to 3 months. And that's my expectations for Tesla until it does something different, right? And this applies to another stock that had a big dump through earnings, Meta. Yeah, Meta is next on the list. And with Meta, it had a huge dump from earnings and then gave a dead cat bounce. We were able to make money on that big push right here from 545 all the way up to 595. And then I haven't touched the stock since. And now it's rolling over. I was hoping for it to break through 600, but it just didn't. And then on Monday, it sold off and got below this level of support at 578. And then today, it had a big gap down because the indices kind of sold off, right? So with this one, again, the bears have officially taken over the stock. If we clean up the chart, we can see that support is right here. Right there at like 530. And I think it's only a matter of time before we break through it and we go lower. That's what I think. If you think I'm wrong, again, let me know why in the comment section below. All right. Now, the last stock that we're going to talk about in today's video is going to be Netflix. And there is something that I noticed. There is a flow, or I would say a rotation of money happening as the memory sector falls. Again, I told y'all the 2 stocks that I had yesterday for swings were either Google and AMD. AMD fell along with the memory sector. But as the memory sector fell, Netflix rose along with a lot of these software companies, right? So, which means CRM and Intuit are back up again. Like what I told y'all with those two stocks, we might actually see it happen if that flow of money is still happening, where money is taken out from memory and being put into software. And some people may argue that Netflix is also software. And if you look at the charts, Netflix chart aligns with the other software stocks. It aligns with it. And the bulls are in control of the stock on a daily. It's not like it hasn't breached below 75 yet. It is choppy. It is sloppy. But it's moving along this line. And as long as it's trending like that, bulls and long-term investors are happy with it, right? But eventually it's going to have to like make up its mind, and it's going to have to accelerate, whether to the upside, most likely to the upside, and it might hit 85 either here or here. All right, but that's my thoughts on these stocks, and that is the end of the video. Again, I am not your financial advisor. Do your own research and make your own decisions. All right. Don't forget to follow me on social media at Paul Nguma and at Patternology Lab on Instagram and on X. And lastly, don't forget to like and subscribe for more.